chat a little bit more about that, we have with us Ajit Venkataraman, the MD at Finolex Industries, on the show right now. Ajit, morning. Great to have you on the show. Let's, dissect your Q1 performance, because while pipes and fittings, the volumes saw decent growth of about 28%, but at the same time, PVC resin volumes also saw a decline of 27%. What would you attribute that to?
So we had the highest first quarter volumes ever, over 92,000 metric tons. And our margins have also improved. It was at about 12.93% EBITDA. And in terms of resin, yes, there was a decline in volume. We had taken a shutdown for maintenance for over 20 days in our Ratnagiri plant. And also, other factor which has impacted is the PVC prices have gone down, and therefore that has impacted the revenues.
All of your growth was price-led?
No, it is much more in the supply side than anything else.
Okay. Now that supply...
we taken down for almost a month.
Okay. The business which you represent, it is believed that it also has a very strong interconnect with what happens to monsoon and what happens to the agrarian demand. Given that this year we've had erratic rainfall, sometimes it's raining, sometimes it's not raining. If it's raining, it's pouring. That's Bombay for you. That was Delhi for you last week. What happens to the demand scenario on the agrarian front?
See, the need for irrigating the land is important. Only about 50% of the land, agricultural land in India is irrigated. The remaining 50% is rain dependent. So we are going to shift more at a shift towards irrigated land. So whether it rains or not, water has to go from the water source to the farmland. So whether it rains, when it rains, farmers have more money to invest in setting up irrigation pipelines. And when it doesn't rain, they also need pipelines to be able to transport water from water source to their land. So either way, the business will not be impacted much. The growth which is seen in agricultural segment will continue.
On PVC resin, if I'm getting the pronunciation right, there is a drop of 27%. What is that because of?
No, as I mentioned, the PVC, we had taken a shutdown in our Ratnagiri plant for maintenance. This is the annual maintenance which we normally take. And that is the main reason for the impact in the volumes in resin.
Mr. Venkataraman, let's just get in your plans as well and outlook in terms of the non-agri mix to 50% in the long term. What is your outlook in terms of what is going to be the margin benefit, considering that non-agri is fairly high in terms of the margins?
So we are consciously working on the non-agri segment, and going into the future, our product mix will shift a lot more towards the non-agri segment. And towards that, we are taking some very concrete steps.
You think the industry will grow at, and at what rate do you think you will grow at?
See, there are two specific segments we are looking at, the agri and the non-agri segments. The agri segments we expect to be the higher single-digit growths. And for the non-agri segment, the industry is growing at about 15%. So we expect our growth to be a little bit higher than that.
Will that be largely because of market share gain?
It's very difficult to talk about market share because there is no one industry body which collects the information across the segment, and there's almost about 40-45% of the market which is unorganized. So to talk about market share movement is a little bit difficult.
It is a very handsome growth rate at your base. What gives you the confidence that you will grow at 15%?
So we have taken the appropriate steps. We have the product range, we have the network, we have the people, and we have the processes to walk in that path. And we have got very good traction over the last 3 to 4 years.
My final question is perhaps trying to understand the return ratios here. As you will grow at 15-20% and you've already done a lot of capex, and when the new capex and capacity kicks in, at what would be the level of a return ratio, especially return on, especially ROS, because that is something which institutional investors always look at.
So we have been consistently getting a ROC of excess of 25%, and that's something which we would be aiming at as well.
This is including your capex plans.
We just invested in a new fitting factory in Talegaon, which added about 25% to our fittings volume. And going forward, we are looking very soon. We will be needing an expansion, and we are looking currently evaluating it.
Final question is that how will FY24 be different than FY24? FY24 will be different from FY23.
See, it all depends upon how the PVC prices move. We have seen a certain degree of stability between December and now, and if that continues, then we should be looking for a fairly steady growth.
Okay, good to have you on board. Thanks so much for joining in.